Hi friends, I've made it back. I'm here. I can do an episode on Ethereum today. I'm not well, okay, but we'll not go into a lot of detail on that. It doesn't really matter. I've not got coronavirus, and I'm not got anything. There's no need to worry, and all of the well wishes that everybody sent me over the last wee while is done wonders. And the hilarious video that TradeSpotting put on yesterday was the best medicine. So anyway, we're looking at this chart recently and asking the question: is this a descending broadening wedge or is it a channel? In the previous video that I put, I had it listed as a channel. Sorry, I had it put in. I changed it over to be a channel, and the sort of the working assumption at that time was that they would have touched the top here and come back down for a next low thereafter towards the lower side of that, just in general. What's actually managed to do is for it to come down here to our sort of one of our lines that we were quite well aware of at that 192 area, and then come back towards the top side. And it looks, you could say then if this was a channel like it's breaking out, but actually we can just revert back our thinking to it being a descending broadening wedge instead, because that's what it actually looks like really at the minute. This period here over the weekend essentially as well, where we saw the downward and the upward price action thereafter, isn't actually the low. This would be the high, this is the low, and then what we're doing now is the high, and in between here is just it's in between. That's all it really is. So we'll have to ask the question: are we still in this? Will we come back down here and have another touch towards the downside or not? Currently the moving averages here are set to 270 and 280. And I want to draw to kind of, I think at a minute, I've been talking about this quite a lot, the dynamic between the working week concept and the for people who work at the CMEs, for instance, trading Bitcoin, so they don't work there, but you know what I mean. And yeah, so they're working Monday to Friday, trading on an exchange which has weekends, okay? And that's the traditional world. So in the traditional world, they use this concept of the 50 and the 200 simple moving averages crossing in order to say that there's a golden cross and that's a bullish trend indicator. But of course, they don't have weekends included there. So you're looking at a different time frame. This is something nobody talks about in Bitcoin or Ethereum or crypto trading at all in general. Nobody ever mentions it out there. And you kind of think, why is one of these things, which is like such an obviously big deal, missing from the discussion? And well, I'm introducing this concept to everybody out there, and I think it's a valuable thing to be bearing in mind, especially whenever you can see the dynamic of this happening on the Ethereum chart right now in front of our faces very, very clearly. So here's it set to 250. The white line is the 200 and the red line's 50. And this is a golden cross that's happened here on Friday or so. And that's normally a bullish indicator of the bullish trend going towards the upside, and it's a positive thing, yada yada. Except if you actually change the numbers so that they would include weekends by setting it to 70 and 280 instead, you can see that somebody said thank you and that on the video just there now, by the way, that so that was nice. You're welcome on the previous video, one of the previous ones. So anyway, you can see this cross here is actually a death cross happened over there on the 28th of April, and that dynamic is quite stark, I think, really currently at the minute, and we can bear this in mind during this period of potential volatility. Now, does that necessarily mean that we're going to have a downward trend? Should you actually be bearish on this? Well, not necessarily, not necessarily. However, it is worth noting that that this has just happened really in general after this downward crushing price movement, and the upward we had this golden cross happen here, and then as the prices came up to back to the moving averages, and we had this death cross again. We've had a good degree of increased volatility really over the period since, and perhaps we're operating inside a descending broadening wedge that could come back down and retest both of these things in order to kind of confirm as well, if these were to cross again towards the upside and have a golden cross here in terms of this time frame, it would happen after some serious volatility and some washouts that happened to the people who are essentially retail traders, primarily trading off the back of something like this having happened beforehand. You can see the volatility coming down here. It's an easy enough situation to imagine. Anyway, we don't really need to sort of go down to speculative narratives like that. We can kind of more or less wrap up the technical analysis today by saying just a few key things. For instance, if we look over to the left-hand side, you can see at 225, there's a 50% moving average, or 50% Fibonacci retracement coming in there at $225. bucks. And really, that's kind of like splits the difference between our two horizontal lines here at 220 and 230. That's our upside target. And for us to get back into this area where we had the channel before, we'd need to see that the price is coming up as high as those areas now, which is a confluence of resistance. And I would expect to see some sort of pullback there, or else a requirement for an increase in volume really to offset a big increase in volume to offset that sort of resistance and price action that's happening in and around that time, where people take good profits. So you can bear that in mind and look out for it. As you can see, the volume's actually been diminishing throughout this period here. You could say that it had been going up slightly from the volume was much higher over here. Then it started to go down a bit. Then it kind of was coming up for a wee while during this upward movement here. And then ever since, it's really just been kind of coming back down again. So, that's the dynamics that are there. That's the whole dynamic shift that's on the go. And we've got levels in mind. We've got the top of this wedge area here, which I've obviously been fiddling around with, and, is obviously it's subjective, it's debatable. But the concept being that in and around that $210, can we establish that? It slopes to the downside. So stay above $200 for a couple of days, and maybe we start to look towards that as being that positive. We've got the $215 area just in terms of the sort of the upper side resistance there, the sort of the first one. Get to 215, then we've got 220, 225 and 230 there afterwards being the sort of the main ones coming up. And we would still be looking at this upward sloping sort of trend line and asking, are we going to be finding resistance in amongst that? And then towards the downside, you've got 191, 185 and 177, and of course the moving averages themselves and around those areas to be being aware of. And that'll have to wrap us up for today. Thank you so much for tuning in. There's trades to be had in all sorts of directions all around there, and I don't tend not to give trade call ideas or whatever. Entries and exits are there for you to discover for yourself, of course, but I don't actually give people signals exactly or like and that, because I think that all that can do is create FOMO, and it's generally speaking a bad idea for the health of the community in the long run. And that's what I'm all about here. Thank you so much for tuning in today. I'll catch you in the next episode.